Good day, good day. Today we are going to do the income statement. Income statement. The information below was taken from the books of Romeo Traders. Their financial year ends on 28 February 2018. Romeo Traders uses a markup of 100% on all merchandise sold. So we're told to prepare the income statement. So we have the sales and the cost of sales. So let's just go straight to the adjustment. The adjustment number one, the sale of merchandise on credit to MK Jones for 4,500 was not recorded. So here we sold and then we did not record. So we sold for 4,500. So let's go to your answer sheet. So we sold for 4,500. But if we are selling, four accounts are affected. If we are selling, four accounts are affected. The first one is the sales. The second one, so here because we sold on credit, so it means that debtors control is also affected. And then also trading stock is affected, and also cost of sales is affected. So when we are selling, so here we are selling on credit. So if we are selling on credit, it means that your debtors control is increasing, and your debtors control increase on a debit side. So it's going to increase with the account for the sales. And then the double entry system is saying, if you record something on a debit side, it must also be recorded on a credit side. So you're going to go to your sales and record on a credit side. So you know that your sales, they increase on a credit side. Obviously, because we are selling, obviously your sales, they are increasing. And then you go to your trading stock. So here we are selling a trading stock. So if you are selling a trading stock, it means that your trading stock is decreasing. So the trading stock decreases with the amount of the cost of sales. So if you record something on a credit side, it must also be recorded on a debit side. So we record the cost of sale with the account of the trading stock. You record your trading stock with the account of the cost of sales. So look at this. So you know that the cost of sales, they're an expense. So if you can check on this, you can see that the sales and the cost of sales, they are increasing. So let's go and increase the sales because we said that they're increasing. If we are selling, it means that your sales are increasing. So we sold for how much? 4,500. So now we need to calculate the amount for the cost of sales. So 4,500 times. And then here, they said Romeo Traders uses a markup of 100% on all merchandise sold. So to do this, you must say, so cost price plus markup is equal to selling price. So the markup is given is 100%. So what you should know is that your cost price will always be 100%. So cost price plus markup is equal to 200. And then when you are multiplying, below you must put what you have, above you must put what you don't have. So below we have 4,500, which is the selling price. So the selling price is 200. This is what we have. And then what you are looking for, which you don't have, is the cost price, which is 100. So 4,500 times 100 divided by 200. The answer is 2,250. So we have to go and add that amount in your cost of sales. How much is your money for the cost of sales? 309,000. 309,000 plus 2,250. So we're done with this one. So let's just erase it. We're done with this one. Let's just erase it because we're done with it. Yeah. Continue. Transaction number 2. A credit note was issued to JROP in respect of the goods returned. So if they are saying a credit note was issued, that is a debtors allowances journal. That is the first thing that you must know. And then they said the cost price of these goods was 7,500. Let me just do this one. So credit notes was issued to JROP in respect of the goods returned. So if there's a credit note that was issued, that is a debtors allowances journal. So you know that in a debtors allowances journal, 4 accounts are affected. The first one is the debtors allowances. The second one is debtors control. The third one is the trading stock. The fourth one is the cost of sale. Now, if we are returning the goods, if the debtors are returning the goods, it means that your debtors control is decreasing. Here is your debtors control. So your debtors control is decreasing with an account of the debtors allowances. So if the debtors are returning the goods, then your debtors allowances is increasing. So this is an expense. So double entry system is saying if you record something on a credit side, it must also be recorded on a debit side. So debtors allowances increases with the account of the debtors control. And then you go to your trading stock and the cost of sales. So the debtors are returning the goods. That means that your trading stock is increasing because the debtors they are returning the goods. So your trading stock is increasing. So your trading stock is increasing with which account? With the cost of sales. So if you record something on a debit side, it must also be recorded on a credit side as a trading stock. So if we can look at this, the cost of sales is decreasing, and then the debtors allowances is increasing. So you know that the debtors allowances they decreases your sales. So how much is your cost of sales? So you are giving the money for the cost of sales. It's 7,500, and then here the cost of sales is decreasing. So let's go and decrease the cost of sales. Minus 7,500. And then they said, so we were giving only the money for the cost price. So now we just need to calculate the money for the sales. So it's 7,500 times. So what do we have? Remember, we said that cost price plus markup is equal to selling price. So markup is given as 100%. Then the cost price will always be 100. So then the selling price is at 200. So what we have is a 7,500, which is a cost price. So we have a cost price. The cost price is 100. And then what we don't have is the second price, which is the 200, is equal to 7,500 times 200 divided by 100 is 15,000. That is the money for the debtors allowances. So we said that the debtors allowances decreases your sales. So let's go and decreases your sales. So minus 15,000. And then obviously your debtors allowances decreases your sales. So let's take the ones that are here and go and decreases your sales. 17,850 minus 17,850. So let's calculate. It's going to be 725, 50, and 4,500 minus 15,000 minus 17,850. The answer is 597,500. And then 209 plus 2250 minus 7,500. The answer is 202,750 minus 597. The answer is 292,750. And then now we are going to the operating incomes. Okay, number 3. The owner had donated a stock worth 5,200 at cost to an old age home. This was not recorded. So this is a donation. So a donation is an expense to a business. So let's check if we have a donation here. So we don't have a donation. So let's go and report it. A donation of 5,200. So a donation is an expense to the business. It's a donation 5,200. Next, the accountant of Romeo Traders did not reverse the stationery on hand from the previous year. Okay. How much is the stationery? The stationery amount is 1,800. Let's check. Okay, it's 1,800. So now we have to reverse that stationery. We have to reverse the stationery for the previous year is 300. So plus 300. And then transaction number 5. A physical stock take on 28 February reveals the following on hand. Trading stock is 29,000. Trading stock it is 29,000. And then stationery it is 600. So you must always subtract the stationery on hand. So the stationery on hand, it's in 800. So you must always subtract your stationery on hand. And then now we have trading stock. So let's check on whether we have trading stock deficit or the trading stock surplus. Let's check. Let me just erase it. Okay. So the trading stock that we have is 38,000. 38,000. Okay. So here a trading stock was sold on credit for 4,500. So how much was the money for the cost of sales? How much was the money for the cost of sales? It was 2,250. So obviously, if we are selling, it means that the trading stock is decreasing. So 2,250. And then here, a credit note was issued to JLP in respect of goods returned. The cost of the goods was 7,500. The transaction was not recorded. So the goods were returned by a customer. So if a customer returned the goods, it means that your trading stock is increasing. So we were given demand for the trading stock is 7,500. So plus 7,500. Now, how much trading stock do we have that is remaining? So 3,000 minus 2,050 plus 7,500. So the trading stock is 42,250. So this means that we have a trading stock deficit. We have a trading stock deficit. Trading stock deficit. So it's 42,250 minus 29,000. So the answer is 14,250. And then let's continue. Number 6, B, dealing a debtor who owed Romeo Traders 7,000 was declared insolvent. He transferred 2,100 into the bank account. The balance must be written off. So it is a bad debt. How much is the money for a bad debt? It's 1,035. 1,035 plus the new bad debts. The new bad debts. So here they are telling us that he transferred 2,100 and then the balance must be written off. Remember, he owed us 700. So to check that how much is going to be written off, we are going to say 7,000 minus 2,100 and then look at the answer. So 7,000 minus 2,900. The answer is 4,900. That is a new bad debt. 4,900. The answer is 5,905. Then continue. Depreciation must of 16,250 must still be provided for. Let's check if we have any depreciation here. No, we don't. So we just take it. 16,350. It's a depreciation. 16,350. And then rent was received up to the end of April 2018. Okay, this one we need to explain this one. We need to explain this one. We just erase this. Okay. How much is the rent income? The rent income is 22,200. The rent income is 22,200. And then, okay, they are saying that take into account that the rent was increased by 10% from 1 September. And then they are telling you that the rent was increased, was received up to April 2018. And then our year ends on 28 February 2018. This means that we have 2 months in advance because the rent was received up to the end of April. So we have March and April. This means that the rent that we have is for 14 months. It's for 14 months. The rent income that we have is for 14 months. So here, they are talking about the percentage. So what we are going to do here is, we are going to do it like this. This is what you're going to do. So, the rent was increased on 1 September. So this means that from 1 September, the rent that you were paying, it was 110% because there was 10% that was included. It was included. This means that from 1 September 2017, this tenant was paying us 110% because we are adding the 10%. So it's September, October, November, December, January, February, March, April, because we have the 2 months in advance. This means that for 8 months, this tenant was paying us 110%. And then for 100%. So our year starts from March, April, May, June, July, August, September. So this means that there's this March, April, May, June, July, August, 6 months. This means for 6 months, this tenant was paying us 100 before the rent was increased. So 100 times 6, that is a 600. And then 110 times 8, that is 808. So we're going to say 880 plus 600. The answer is 1,408. So this is our rent income. This is our rent income that is including the percentage of 10%. So what you need to do is you need to subtract the increment so that you are going to know this how much was the rent before it was increased. So to do that, the increment is 10%. The increment is 10%. And then This increment is for 8 months, from 1 September to 1 September to April 2018. This increment is for 8 months, so it's for that is an 80%. So I said what you need to do is you must subtract the increment. So you're going to say 1480 minus 80 is equal to 1400. And then what you need to do next is, remember, your rent income is 22,200. So what you need to do next is, see, so remember I said above we put what you don't have, below we put what you have. So below what we have is a rent income that is including the 8%. The rent income that is including the increment. And then what we want is the rent income that does not include the increment. It's 1,400. And the answer is 21,000. So we're going to divide by 14 because the rent that we have is for 14 months. So divide by 21,000 divided by 14, the answer is 1,500. And now we want to find out that how much is the rent plus increment. So 1,500 times 10% of the rent times 10%. The rent is a 150%. I mean, it's a 150 rand. The increment is a 150 rand. So now this means that the rent plus the increment is 1,650. So because there were 2 months in advance, you must say times 2. Then the answer is 3,300. This is the advance month, 3,300. So let's go to your rent. So the rent is 2,200, 2,200. Then the advance one is 3,300. So 2,200 minus 2,300. The answer is 18,900. Let me just erase this. So let's going to continue with our work. We'll just use all of these. We're almost done. Almost done. Almost done. Almost done. Okay. Number 9. The payment for advertising was a payment for 2 adverts. One of the adverts will only appear in the newspaper in March. Okay, how much is the advertisement money? The advertising money, 5,600. So what I know for sure is that, so the advertising money is 5,600. What I know for sure is that if you are dealing with the income statement, you cannot pay for the next financial year. So you must subtract what does not belong in our financial year. So we paid for the 2 advertisements. The first one of the adverts is will only appear in the newspaper in March. So we need to find out that how much is an advert each. So 5,600 divided by 2, the answer is 2,800. So remember, one of the adverts is for the next financial year. It's for the next financial year. So we must subtract it because it's not for this year. So minus 2,800. And then number 10, a debtor deposited into the bank account 760. The debtor's account had been previously written off. Well, they are done. That is the bad debt recovered. So we need to check if you have one here in your trial balance. No, we don't have a bad debt recovered. So in 760, bad debt recovered. That is an income. Bad debt. So it's 760 recovered. Okay. And then the bank statement received from the bank reflected the following: service fees. So let's check if we have the service fees. Do we have the service fees? Do we have the service fees? Seems like we don't have the service fees. Let me check. Service fees. So the service fees, these are the bank charges. The service fees, they are the bank charges. We must regard them as the bank charges. So the bank charges is 1,210. 1,210 plus the service fees. It's 1,470. The answer is 2,608. And then number 2, the interest on current account. Interest on current account, that is an interest income. Interest on current account, that is an interest income. So how much is the interest on current account? It's 1,200. What are they saying next? Water and electricity of 1,300 for February 2018 will only be paid in March 2018. That is an accrued expense. That is an accrued expense. It's 1,300. Let's check. The water and electricity is 24,000. Then we have the accrued expense of 1,300. So the answer is 25,300. And then number 30, insurance include an amount of 4,200, which is okay. Let's just check the amount for the insurance. The insurance is 16,000. Insurance 16,000. Okay, let's go back to this one. So the insurance is 4,200. Okay, include an amount of 4,200, which is the annual premium for insurance payable on the first June of the year. So our year ends on 28th February 2018. And then we are making an annual premium of 4,200 every first June. So if you say every first June, this means it's going to be June 2017, July, August, September, October, November, December, January, February. 9 months. Only 9 months belong to us. And then March, April, May. March, April, and May, and March, April, and May don't belong to this year. So it's March, April, and May. Only 3 months do not belong to us. So we must say 4,200 times 3 over 12 is equal to, the answer is 1,050. This is a prepaid expense because remember here they said insurance includes an amount of 4,200. So this money is already included in the insurance amount. So we must subtract this month's that are prepaid, which is for 1,050. $14,950. Then we are done with the adjustments. So now let's just do the calculations. So it's 9,000 plus 18,900 plus 760. The answer is 28,660. Gross profit plus operating income. The answer is 322,410. And then now the operating expenses. The telephone. Where is the telephone? The telephone money is 4,425. 4,425. Then stationery. Then sundry expenses 1,400. 419,290. That is the money for the operating expenses. So we need to find the difference. So the difference is 102,000. 103, 120. Then we have the interest income. Interest income, we have the interest and fixed deposits of 5,000. We have another interest income. No, seems like we don't have another interest income. So the answer is 6,300. So the answer is 109,420. And then we have the interest expense. The interest expense with the interest and loan is 11,000. So minus 11,000. Yeah, that is 98,20.